Hi, everyone. We're just waiting for a few more people. We're about to start. Just wait for a couple of minutes more. Thanks for your patience. We can see that people are still joining in. So just be patient, just let everybody in first. Okay, I think we can start first. I'm sure those who join in later can follow from there. Very good morning to everyone. I assume most of you are in Malaysia. Um, my name is Jolene. I am based in Melbourne. I'm joined today by my colleague Shelvin Tan. She's there. I think you can see her. She's based in KL. So we welcome you to join our webinar today and really thank you for taking your precious time on the Sunday morning to join us. We will try not to take too long, but we'll give you as much as we can. So Shelvin, should we start?
Yes, please.
Okay, good. Oh, sorry. Before that, if you have any questions that you would like to ask us, please put in the chat box or the Q&A. If we can't answer you during the course of the webinar, we will get back to you later, or we can have a session later. Okay. Let's start with, sorry, hang on here. Let's start with our webinar's outline today. So this webinar is suitable for investors at all level. Of course, I think, but mostly it's for people who have some sort of an idea about of property investment in Australia or in Melbourne in particular, or people who have started to find out. But if you don't, that is okay as well, because Shelbin and I will be able to arrange a different session or send you information if you have no idea or no basic knowledge at all. So we will cover today, the challenges faced by overseas investors, and most importantly, what is happening in the market today, especially in Melbourne right now. What you should be looking for, whether as an investor or owner occupier, and most importantly, also the project that got us really excited. We'll be unveiling it to you, followed by a live site visit. That is, I think, why a lot of you are here as well, because we're bringing you to the actual site in Melbourne. There will also be a very important announcement at the end of the webinar, especially for investors. I hope you guys can hear me. I hope my background noise of the tram passing by is not too bad. So yes, we'll be announcing all these incentives, that I would like you to stay back. So stay back for the live site visit and the announcements at the end. So first of all, let me start by asking you a simple question. Why are you here today? So ladies and gentlemen, I'm not asking you this question because I need to know or because we need to know. It's basically helping you to understand and make sure of your own goals and the information that you're looking for. So throughout the webinar, you can pick up all the information that you need. Or if we do not cover what you need to know, let us know as well later. So be sure to make full use of this session. And for whatever reasons you are here today, whether it's looking to buy a home for your children when they study here, or looking for your future migration use, or to invest your ringgit in a stronger currency, to invest in property, long-term rental income. Have I covered anything? Oh, migration or future migration, or just to invest in a better market, a better, a more stable market from what you have in Malaysia. So if you take any one of these reasons and you are financially capable, then you are in the right space today, and you're basically taking your first step, and maybe not your first step, maybe this is your second step already. So back to why are you here today? For whatever reasons that you have just now, I'm very sure it all comes down to that you want to make a meaningful and successful investment and wealth creation for yourself and your family. Well, we all know that property investment, is one of the oldest wealth creation method, also one of the most secure one. Well, but I don't have to go into this because all of you know the fundamentals, more or less. But I think the reason why a lot of you are here today is because the key challenge is to invest in a different country, in a city that is foreign to you. So I think that's why we're here today, and we'll try to go through as much as we can with you. So let's see. I think these are the most common challenges, that you might have. Where do you buy? Who do you contact? Who do you ask? What do you buy? Or how much is it going to cost you? And is it safe? How is the process like? It's going to be difficult because I'm an overseas person. And then there are the dilemmas. We understand that while some of you have already made up your decision that, okay, I'm going to buy something in Australia, in Melbourne. But there are also a lot of you who might be thinking, is investing in Melbourne a suitable choice for me or not? Or should I buy at home in Malaysia? And some people might say, oh, I think, Shelvin, you agree. So a lot of people might say, well, I don't have a connection in Melbourne, like I'm not planning to send my kids there. I don't have kids going to study there. I'm not planning to move there. I don't have family or friends. There's no connection. And then some people will be thinking, how do I manage from here? It's so far away. Actually, it's not that far, 7 hours flight only. But all these valid questions. There is no right or wrong decisions or ideas and all that. It all depends to how much is this going to benefit you for your goals, for your investment goals, for your family's requirement. So I think if you don't take out a piece of paper and pen and write down all the pros and cons, write down your investment goals and your family's requirements, you will never know. To make this an investment happen, any investment at all, you need to first of all decide that you want to do this, and the rest of it we can take care of it. We can look after you as well. So I'm hoping that this webinar will also give you a clearer idea of whether this is a good option for you. Oops, sorry. So I think some of you might be here because I can see from some of the people who has registered, you have been to our events, like actual physical events before in Malaysia. So some of you might have missed out before on an opportunity. I don't have to tell, this is one of the oldest story, a very common situation that many people find themselves in actually including myself. I've been in real estate for a very long time, but many times, especially when I was younger, I kept thinking, I'm not ready to do this. I'm not ready to do this. I'm too busy. But in fact, I think I just didn't realize it. And I was just, after a while, you see your clients doing so well, benefited from the investments they made, from all these developments that I study. And then you start to think, hey, I should have bought that too. I actually could have, but I didn't. But then um, nothing's lost. Well, at the end, I was pushed into a corner. I started making investments as well, so it's not too bad. So some of the things, like people say, oh, I've been thinking about buying it for a while, but no time to do it, and then I missed the boat. I should have done this 6 or 8 years ago, or I could have even done it 10 or 15 years ago. But ladies and gentlemen, if you do not do it now, 10 years from now, maybe 10 years from now, you attend another one of my webinars. Well, hopefully I don't have to speak anymore. Hopefully Shelvin can continue, but we don't want you to think, oh my God, 10 years ago, I should have done this when I was attending Jolene's webinar. Yeah. So it's always the case. If you don't do it, you're always going to miss it. And I think, also, some people want to say, oh, I'll wait for a better project. But the thing is, if you are in the right market, if you are if you come across the right product, right price, right location, why do you want to wait for the next market where it might be 50-50 chance that it tick all your boxes? So I think what I'm trying to say here is be very objective of what you want and then decide what you're going to do. Shelvin, I was going to share my own success story. Do we have time? Shall I do that?
Quick one, probably.
Yeah, okay. So this is very interesting. End of last year, I did my last property investment, the last one that I acquired in January 2020. Yeah, I did all the research, everything. I was very happy I got into it. And 2 months later, guess what happened? We all went into lockdown. Pandemic happens, nothing's happened. But did I regret it? Of course not, because I've done all my research at that time. And in fact, 14 months later now, or 13 months, I think around there, yeah, the property valuation of the property I acquired then is now 10% higher than when I paid for it. So I think if the numbers are there, the condition, the market condition and everything is aligned, I don't see why not we shouldn't jump into it. So that's just my little success story, the latest one.
It's
So
worth sharing. It's worth sharing because from my personal point of view,
yeah.
to get your property value to be to receive a surplus in the valuation price is
Mm.
something very rare in
Mm.
market. I wouldn't say it's hard to get that in Melbourne, but if you have done your research and survey and homework, you can get it. And if you, provided you would know how to enter at the right time and you buy into the right location, which we are going to share one of those that fits all the criteria later.
Yeah, and also I think both Shelvin and I, we have done investment both in Malaysia and in Australia. So if you're thinking, oh, is it going to be troublesome or not? Actually, it's not. Why? Because both of us over the last 12 years, we have helped hundreds of Malaysians buying property here. It's really not much of a difference, the procedure, the process and all that. There are some differences. It's actually easier here, but it's not much of difference. The only thing is you get a lot more emails, that's all. So and we will go through the processes with you, but okay, let's not touch that. um I think lastly, you are here today also because you probably think, where do I start? So Shelvin and I work really hard, yeah, to guide our clients as best as we can. And it is, and our business depends on how well you do. It's not about, how many projects I can sell, and things like that. Of course it is, but we have been in the market. Well, I have been 12 years. I think Shelvin similar. So we rely a lot on referrals. I won't go into too much of, like what my company is, blah, 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 and all that. You can actually find everything you need on our website. I think, but it is important to highlight to you that I am licensed as a licensed real estate agent, both in Malaysia and in Melbourne. We have offices in Melbourne and another one in Mont Kiara in Malaysia, where Shelvin is based. I have been in the industry for 21 years to be exact, and the last 12 years focusing on Melbourne property. Okay, probably not to talk too much. Oh, wait, one more. I want to share with you some of my
Sure.
very nice reviews, very sweet reviews from my clients, So you can see all this on our Facebook or Google reviews. Yeah, you can read that later on. So, okay, I think now we moved into the real important stuff, something that a lot of people actually ask us when they sign up for this webinar. A lot of them ask the same questions, um, how is the market doing? Because a lot of people, you're based in Malaysia, you see a lot of Malaysian news, but you're not sure about what's actually happening overseas, Melbourne included. So the thing is, I would love to share with you every piece of good news published in the newspaper or reports published by banks and all that, but it would take too much time. So what we did was we summarize all this in our own words and tell you the few key points that you need to know. So let's start with the line that you can see there on the screen. So major banks locally has predicted between 16 to 20% growth in property prices in the next 2 years. Banks like Commonwealth Bank, you might have heard of it, Westpac, and all other major banks. So you might ask me, is that real? Okay, wait, let me show you the graph. Okay, let's look at this one here. It shows the median house price in Melbourne. So we start here in this box, this time frame. So from early 2018 to about early 2019, about 1 year's time, property prices dipped a little bit. It was probably going through a correction, but it lasted for about a year. And then you can see that from that time, early 2019, all the way up to early 2020, prices actually went up. It went up to a higher point than the prior highest point. Okay. And then I don't need to tell you what happened. We all know what happened in this period of time. Unfortunately, the pandemic hit the world. Everyone, I think most countries went into lockdown at that time, Melbourne included. In fact, Melbourne has the longest lockdown as compared to other major cities in Australia. So, well, businesses were closed, real estate agents were not allowed to work, activities basically stopped. So prices decline a little bit, but if you can see, it declined a little bit, but it's still to a point whereby it's higher than the previous lowest point. Yeah, so it wasn't too bad. It was just that people couldn't go out and shop for houses and all that. So our growth basically took a step back, but that's just for a really short time. So by end of, I think towards the end of 2020, we were coming out from lockdown. And from November 2020, which is recent, onwards, it hasn't stopped. So in fact, today, the median house price in Melbourne is 60,000 more than when 2021 started, which was 4+ months ago in January. So how good is that? Remember what I said earlier about the bank's prediction? This is in line with their prediction of property price growth in the next 2 years. So what this means is we're actually at the beginning of an upward trend of the prices upward trend. And this is another reason why I pushed for this webinar to share this good news with a lot of Malaysians who don't know, because a lot of you were still asking us about, oh, property market must be bad now, yeah, because of pandemic, but it's not. It really is not. And in fact, I think recently in March, I think on the 27th of March, we had the highest number of auction properties sold on the weekend, and it was just crazy. People were lining up to go to open for inspections. People were going to bid for properties. So things are looking really, really good. And okay, I also want to share with you a little bit about this graph. Actually, I just found this graph. It was just published, I think on Friday, was it, Shelvin, when I shared with you? So you can see that this shows exactly the price movement for during the pandemic year from March last year to April this year. So as what I explained earlier, you can see that this is my cursor from about November. It has been going up and it kept going out. And just another slide that it's got nothing to do with the price, but it's very important information here. It shows you the unemployment rate. So very quickly here, if you can see, in the 80s and the 90s recession, unemployment rate was really, really high. And it took, I think, like between 8 to 9 years, 8 to 10 years to recover. So fast forward, let's look at what GFC did. So of course, unemployment rate went up really quickly as well in the first half of the year. And then it took about slightly 2 years to recover. But look at COVID. So I think the Australian economy is still very resilient, even to global events like the pandemic. So basically, we are recovered now. Our unemployment rate is quite low now. There are lots of job creation. I think there's an article published last week as well about this. So you can actually Google and it will tell you exactly what's going on. Okay, what do we need to know next? So both of us, Chauvin and I, get asked these questions a lot. I think in all of 10 years, this is a very popular one. Is there a housing bubble? So every time we have to explain, yeah. So is there a bubble? A lot of people do not understand the difference between a housing boom and a housing bubble. If you look at the historical prices in Australia in general, for the last 60 years, I'm sorry I didn't have the graph here, but you can Google it after this. Last 60 years, there has never been a property crash, never. So there have been booms, but not bubble. So let me show you the difference between a boom and a bubble. So I have two little circles here. One is housing bubble and one is boom. I'll start off with housing bubble. So what is housing bubble? It's a market where it's dominated by investors. You know, people who just went crazy into the market buying properties, even though if they're not sure they can afford it. When you know, you just follow friends say, oh, this is good, you just buy. I think we have experienced that in Malaysia, because at that time I was still working in Malaysia. And then a bubble is usually caused by speculations, yeah, as what I mentioned just now, dominated by the investors company, investments. So so when a bubble bursts, the prices of your property could actually end up a lot lower than where it started. So that is a bubble. How about a housing boom? Housing boom is completely different. It's usually dominated by home buyers, like right now. Yeah. And it happens in cycles. You know, a lot of you know property cycles. Yeah, it goes up like this. Okay. And it happens when property value rise up rapidly, fast. And it does, I won't say that no property cycle goes on forever. So it does usually ends up in a correction. A correction is not a crash. A correction is a mild correction at the end of the cycle. So it usually goes out like this. It comes down a little bit, correct a little bit before the next cycle started. So there you are. That's the difference between a housing bubble and housing boom. So what's going on here right now? It's actually a housing boom. Okay, next, you would want to know, why are the prices rising? What's happening? What's happening now? So we will share with you a slide that I summarized the 5 key important reasons why prices rise so fast. I can't, sorry. Yes, sorry. I thought I couldn't do it there. Okay, the first most important and I think reason why it rises so quickly is because of low interest rates. I don't think we have seen interest rate as low as today. So borrowing rates are low. So the same person, say 2 years ago, making the same amount of money, has larger borrowing capacity today, meaning they can borrow more and it costs less. Yeah. Secondly, pent up demand from home buyers since last year. So last year, because nobody can go out, nobody is buying anything, no one is spending money, no one is going for international holidays, international travels. So Australians at the end of at the end of the lockdown, a lot of Australians realized that, look, my savings have increased a lot. I now actually has a bigger deposit to buy a property. I think that's really important. So being locked down for a while, and then with the low interest rate, I suddenly, it cost me less to borrow. People will come out and shop for property. That it's the second reason. The third reason, I think this is what you might be interested in as well, stamp duty discount. So the Victorian government announced that any contract signed for properties under $1 million, new properties, and between November to end of June this year, you have 2 more months, you get a 50% stamp duty discount. And the best thing is this is available to you as foreigner as well. Yeah. So I think this is another reason, something that helped to push prices up. And of course, there is a list of other incentives that the government is giving to home buyers, like home builder grant, we have first homeowner grants and a list of incentives. But well, unfortunately, these are not available to you. It's also not available to me because I'm a PR. It's only available to citizens. But even though it's not available to you, it's okay. It's contributing to this market. And of course, the low supply. Also, because of last year, a lot of developers were not launching new stocks. A lot of sellers are not selling. No one is actively buying new sites to build property. So these five reasons bring together has actually pushed, encouraged the prices to go up. I hope I'm being clear. Shelby, I'm doing okay, yeah? Okay.
Yep.
So with all these points, I'm sure the next question that people want to know is, so if I'm interested, what type of property should I be looking for? Okay. The thing is there is no one single type or one location of property that is the best, because there are a lot of good properties, good projects in the market, but you need to tick some boxes. There are certain attributes that are important in choosing your investment property, or even for your own stay or for your kids. Let's look at what I summarized. Yeah, look at prices first. So we think that properties under $1 million, of course, will have the largest market share. So we identify the price range under $1 million, and then look at the attributes. So we have the price, amenities. Amenities will be really important, like things like walking distance to a supermarket, to cafes, to a park, things like that. Amenities will be very important, and distances to city, distances to other key employment areas. I think that's important as well. And the next thing is open space. The local people, including myself, yeah, we love our open space here. We actually go out for our walks, uh, um, not like just jogging or exercise, but open space is very, very important to Melbourneians. So that is something that you need to look at. And lastly, because of the way people work now, the ease of working from home will also need to be paid attention to, because a lot of either your buyers next time or your tenants will be looking at this. So this actually working from home also covers, um, things like actually cover is sort of overlapping a little bit with amenities, because if you're working from home, you don't want to be going out, somewhere really far away to do your banking, for example, to go to a bank, or to visit your dentist and things like that. So it has to be what we call within a 20 minutes neighborhood. Yeah. So these are the few things. Oh, sorry, I forgot the circle. Now, there you go. Everything that the red circle has will be important. Next, I will summarize what are the few things, I mean, of what I said earlier, that you should be looking at as an owner occupier or as an investor. As an owner occupier, because I know a lot of you here will be looking at properties that you want to buy for your kids to live in when they go to universities in Melbourne. So you want it to be close to uni or school. You want it to be convenient with amenities, the basic like supermarkets, cafes, restaurants, even cinemas, all that, even banks and all that, everything, amenities, yes, because, and public transport, of course, very important. It should also be in a safe environment where you have a peace of mind that your kids will be okay staying there. And of course, lastly, the quality. You want to buy something that's built for owner occupier, not just an investor stock, not just a rental property. You want quality fittings. You want everything that's well thought of. Good brands and um, um, developers background. How about an investor? As an investor, I think first of all, your main criteria is of course to look at attractive entry price. You want competitive pricing. You want to be buying at a price that's better than other development. I think that's very important. Number two, you want to look at an area where there is a large tenant pool, because these are the people who will be giving you rent. And then you want to be in the growth corridors as well. You know that your property will grow in price. Of course, you also want quality. You want to buy things that are built for owner occupier, and then the ease of reselling. So these are the things, I know that there are a lot of you here. These are the things that whether you're an owner occupier or an investor, you should look at. So coming to what are we unveiling today? So we will be talking shortly. Chauvin will be presenting to you a development that satisfy all the above, all the points that I mentioned. Short distance away from the city, in the right price range, amenities, and everything. So Chauvin?
Yep. Okay. So I'm going to take over. And
Yes, and yeah,
basically,
and I am sorry, Chauvin. So just to let everybody know, because I am the one with the slides here. So Chauvin, if you need me to move, if I haven't moved, just let me know.
we do. Yes.
Okay? Yeah.
So what you are seeing now is the CGI of schemes that we are going to present to you. It is called East Brunswick Village. So you move on to the next slide, and that's the facade. Um, before I gave you a deep dive into the development, I personally stay in Melbourne for 3 years for my university. That was a long time ago, but every now and then, before the pandemic, I do travel to Melbourne almost once or twice every year. I've seen the changes in the residential landscape in Melbourne itself, not just in the CBD, but also in the suburban areas like Brunswick. Back then, I stayed in North Melbourne, and it's quite a close distance to Brunswick. Just to give you a bit of bearing, Brunswick is located in the inner north suburb. It's approximately 5 to 6 km from the CBD. And back then, it was just a really standard suburb, I would say. There wasn't much excitement back in 15, 16 years ago. There were already established malls and supermarkets or old housing and all, but there was not much of thriving parts I could see back then. But over the years, when I traveled to Melbourne, I do see a lot of efforts from the council, the government, and the developers who basically work together and to identify the part and parcel of land in Brunswick, which were worth for regenerations. And East Brunswick Village is one of it. And for me, this location is more strategic because it's very close to the transportation system and the setup itself, the concept itself. It's like a community itself. And they even have an Instagram page. I've seen it. They put out their updates and the activities, and all the residents were actually hang out together. So this is the part I really like because it's thriving, it's vibrant, it's quite hipsters, and it fits people like in my age, or probably your kids as well.
Mhm.
Let's move on to the next page. I'll share all of my excitement with this development. Next page, please.
Yep.
So is Brunswick Village suitable for you? I would say yes, it ticks all the boxes. And first and foremost, it's really, really ideal for parents because if you have kids who are going to study in Melbourne or who are already in Melbourne, it's actually a very safe environment for the kids. It's well secured. The apartment will be secured by the FOB system. And even for them to go back home late because it's so close to all the tram stops. So, and it's particularly quite convenient for students or kids who are studying in Melbourne U. That's where I came from. Hence, I was going around
And RMIT, that's where I went to.
promotion. But these
Yeah.
two schools are basically within the radius, which I think are really safe for the kids to travel. And they can even cycle. They can cycle down to Melbourne U in say 15 minutes, normal
Yeah.
speed. Yeah?
Yeah.
And
And I think Brunswick, East Brunswick, this direction, basically, the local government has done a lot in the past few years. Like what Shelby mentioned earlier about cycling. I cycle too, yeah, around Melbourne for hobby. And this area has, I think, the most cyclists commuting to and from the city every day in Melbourne. And there are a lot of designated bicycle paths, which is fantastic. So you don't have to cycle next to cars, you just cycle in your own protected path. So I think that's really wonderful too.
can
Chauvin can't hear you.
you hear me now?
Yeah,
Better now? Okay.
yeah,
I just want to emphasize the effort coming from the local government and also the developers because they do notice that the demographic or the population who cycle in the city or in the suburbs have been increasing as well. So they do
yeah.
come up with a nice bicycle path for the people who are riding every day on a daily basis. And this is part of the plan as well. If you move on to the low and medium risk, why you are getting this advantage because we are basically looking at a very locally appealing area in a sense that you will see lots of the local Australians who are staying in this area. You wouldn't really see
Mm,
a lot of expatriates and foreigner students. Yes, you do, but 90% of the population are basically the local Aussies. And bear in mind, when it comes to your resale, the exit strategy has to be there in a sense that when you sell back to when you release your property, you dispose your property, you can only sell back to the Australians or the local, the PR, the citizens. So when you come to this area, you do have an existing market to sell to. Okay, move on to the next one, long-term rental market. I will probably look at the angle of the length of the tenancy, especially when you get a tenants, if you don't have any case study there, it doesn't mean that you don't have a valid reason to invest. You must.
I I think this is also when we talk about long-term rental income, there are some types of investors, might be you or might be not, but we have a lot of clients over the year. So they're just building portfolio, yeah, portfolio of properties that give them the highest rental return. So these are the clients that okay, it's not about just buying property and want to make a quick buck out of it. It's more for I'm creating this portfolio that I'm going to pass on to my younger generation later. So I'm putting in all the properties that give me good rental income. So this East Brunswick Village is one of these that we identified that's very suitable for this type of investment.
Yes. And also
Mm,
we should also look at the standard length of the tenancy that we can secure in Melbourne. They are normally when they sign out for the lease, the TA, usually they will look for at least 12 months to 24 months. I've got a property in Melbourne as well, but it's not in Brunswick, it's in Burwood. But over the years, I've got the same tenants throughout. They are really happy. They are comfortable with where they live. I think that is where you get a long-term rental income. And not only that, they are willing to pay more on the second year. So future on use, again, it's only 6 km from the CBD. it tick all the boxes as your perfect home. If you want to migrate, don't know, probably something happened, you have decided to migrate, that is the perfect
Yeah.
right spot for you to
Yeah.
move.
I think I will just cover this a little bit. We were not planning to say this because what I'm about to say now, but usually it's in our client engagement program. But I'll just cover this a little bit. A lot of people say, okay, I'm planning to move to Melbourne, but not now, in 5 years' time. I want to buy a property there, so I can live in. But the thing is, many times, right, before you actually move here, you don't know where you're gonna live because you haven't really explored it here. So what I advise, or what we advise client is invest in something that you can either rent it out for now, or in the short term when you move here, before looking for the perfect home, you want somewhere that's convenient to live in the interim time. Okay, maybe you have enough to buy another one and keep this for rental because it's going to be a good one. But this is one of the strategy that we advise some of the clients to do. So instead of waiting for 5 years, when you're ready to move here, you basically go into the market first, start getting some rental income. Well, if you're buying cash, you'll be saving up a lot of money in your bank account by the time you come here. Yeah. Or some people think that my kids are still young. They won't be going to uni in 4 or 5 years time. It's the same thing. Invest now, get some rental income. At least you're buying at today's price, not a price 5 years later. Yeah. Back to you, Shavin.
Pre-planning is it's necessary when it comes to a long-term investment journey, especially when you have a property in the overseas. Go to the next page.
Okay.
Location. Now we are going to cover the reasons why we pick East Brunswick Village. Like I mentioned, it's only 6 km from the CBD, and the tram stop is just right at the doorstep. This tram will take you straight into the city as well. And it's
Into Burke Street. So basically, I know a lot of you probably know Melbourne a little bit. Everyone knows Burke Street in the city. So from Nicholson Street, where the project is, it goes through Spring Street and it turns into Burke Street. So it cuts across the city, like the middle of the city. Basically on Burke Street, you can basically get off anywhere to go to, even Chinatown. You
correct,
take that tram. Yeah.
because Burke Street is just literally one lane
Mm,
away from Chinatown.
yeah.
Okay, so basically, apart from the CBD and I think the university takes a lot of ticks the boxes as well, because Melbourne U is it's probably about 3 km from the side. Um,
Yeah. It's
it's
nearby.
really nearby, just down the road, and it's safe to stay
Yeah.
there. It's safe to walk there. Even you drive. I don't think it's 15 minutes. It's about 10 actually. It's quite close, depending
Yeah.
on the you attend. And there is also a Coles a supermarket on site. It's literally just next to the building, next to the apartment that we are going to show you later.
It's Yeah, the course is within the development, but it's going to be next to the building that we are unveiling today.
Yes, exactly. And as you know, Coles or even Woolworths are really, really important, is essential building.
Yes, and Shelvin, remember I told you this course is so nice. It's one of the newer ones, it's got gourmet, like more gourmet style ones, really beautiful, really nice. You get everything there. So I was very excited when I saw it the first time.
And the best part is it's already there. You don't have to wait
Yeah,
2, 3 years to get it up and running. It's there.
yeah, it's already there.
Next year in year end, just walk across. You can get your food, your steak, your organic products. It's just at the doorsteps. Then, of course, you have got
Mhm.
cafes and restaurants, shops, fitness, yoga studios. They have a bike repair stores, and they have and many other wellness spa center, all within walking distance. In terms of walk score, if you are familiar with Melbourne properties, we always look at walk score, and of course
Mm,
the full mark is 100. Our rate is 99. It's really 99 because
fantastic. Yeah.
you can run your daily errands all within 5 to 10
Yeah. So
minutes.
again, remember what I said earlier. These will basically tick the boxes of your future tenant as well, because a lot of people will want to know, can I work from home? Is it convenient? I can just, lunch break, I can just go downstairs, get my food, or get some fresh food, things like that. Everything has to be within 20 minutes.
Exactly, exactly. And of
Mm.
course, most importantly, when it comes to your exit strategy, you have got the market ready for you because majority are the local residents.
Yep. And yeah, so this is the Google map that that we put it on. So East Brunswick Village is here,
Mhm.
6 kilometer from Melbourne CBD. So this is Melbourne CBD that you might be familiar with, and this is Melbourne Uni.
Yes.
So it's only 6 kilometer away. Back to you, Sheldon.
If you just stick on with the circle, the 6 km radius,
Mm.
and we've moved on to down south, then you can see South Yarra or Paran, South Melbourne. They're all probably within the same proximity because the suburb itself is quite, it spans quite large. But just to give you a bit of insights and the comparison, if we look at areas like South Yarra or South Melbourne, they are more expensive in the sense that there are different elements to contribute to the price differences. But I would think because those areas are more established and mature, of course, you would actually identify why they're mature just by the look of the trees. The trees are actually, older along the street. You get tree lines boulevard, but of course, you can also look at the age of the people who are staying there. They are more middle to 40 to 60 years old. Sorry, don't take no offense, but these are the demographic in those areas, and also the mix of the retail and the mix of the schools. Hence, there is a premium to the land costs in those areas. Whereas in East Brunswick, I wouldn't say the retail mix is not right. Basically, they are younger in that sense that previously this part of suburb was not for redevelopment, because the government has not, they didn't realize that, or it actually needed some attention. But as soon as they noticed that there is an increased demand for areas like this because of the education factor, because of job creations, hence they opened up the plan for regenerations. Then the developers came in and then they bought up the site, they tear down all the old houses, they put in the new retails. And the new retail is not like, just normal cafes and restaurants. The other retails which are more independent, then you also would see lots of co-working space around. You will see lots of art studios and art galleries. If you want to fair this to in KL context, I would think it's like Bangsa South, because Bangsa South
Mm.
is actually, and also an uprising star at the moment because they have got all the offices in that plot of land. You have lots of younger generation working population in the area. So really, in my context, Bangsa South will be just like East Brunswick, but East Brunswick, when it comes to East Brunswick, is more established already, whereas Bangsa South
Mm.
was quite, it was quite underdeveloped.
Yeah, yeah, yeah. And this is another picture that I obtained it from the developer. So it shows you, it gives you a bit of, because just now we look at a flat map here. So this one shows this is the site, East Brunswick. And then you can see at the background, that's a city, how
Yes.
close it is. Yeah. So and here they have highlighted you have RMIT University, Melbourne University is here, Carlton is here, Royal Botanic Gardens there. It's really, really close. So I hope this picture gives you a much better idea, even though it's black and white, but it's really clear. Okay.
Move on to the next one, on-site. Like I mentioned earlier, it's a master plan development. It's also an urban redevelopment scheme, and because it's just like a village, those type of living and the environment, the setup. Hence, they are putting most of the daily amenities in the development itself. So you get co-working space because of the from home demand, thanks to the pandemic. Then we've got a rooftop garden. You can grow your vegetable at the rooftop garden.
Mm-hmm.
Yes, you can. I'm sure, Jolene, you've seen
Yes.
site already.
I have seen it, and I've actually uploaded these photos of the gardens on our Facebook page. It's in one of the posts recently. Just go look for it. It's there. It's really nice.
And of course, you have car charging stations, you have secure parking and storage. You want to mention about storage, Jolene? I think you were amazed as well.
Oh my God. The storage, it's very different. The storage cage, because I was shown by my other associate, and it's not like the usual storage that's built by some link chain or chain link, yeah, in Malaysia we call. But this one is proper, it's like proper cover up cages that people can't see inside. So I've never seen this before in Melbourne, to be honest, first time. So developer has really put in a lot of thoughts into designing this place. And I think I'll just add on a little bit with the green banner there that I put it. It's actually the nearest community master plan living, uh, um, the nearest one to the CBD at this stage. So I think it's really a blessing that it's only 6 kilometers away, because the other master plan developments usually are a bit further out from the city. So this one, it's I think it's an added bonus.
Correct. And then
Yeah.
part of the amenities, you have got a on-site retail. You have Coles already. It's already up and running. You have
Cafes. Yeah.
cafe will be independent cafe operator. As you know, the coffee scene in Melbourne is really strong, and you can
Hmm.
get that at the doorstep. Apart from that, you get organic food store, you get yoga studio, you get a cinema, a medical center, and also a bike repair store. By the way, apart from the cafes, uh, in the development itself, they are going to build an alfresco dining
Yeah.
laneway. So that will look really, really good when it's completed.
Yeah.
Next.
So the alfresco dining laneway that Shelvin just mentioned is here. So basically, this is the site, EVP site, yeah. So follow the cursor on my screen. This bit here is completed. This is where Coles is, and the cafes, you know, and the other stores are. So what we're looking at is here.
Mhm.
Do you want me to go on, or you can? Yeah,
Literally walk
yeah. So
to get to.
yes, just across.
You're
So
not.
this is the alfresco laneway here.
That's correct. And also we would like to stress that this developer Banco Group, they are actually very established financially.
Mm,
Why I say that, because when they started the development, um, especially on the side where you see coals being the completed phase, when they started this part of land, they have also started the groundwork of the entire scheme, the entire EBV. So
the
that
basement.
the basement, yes, the
Yeah.
basement. So they do have the financial strength to start the project. They don't have any existing construction loan. They are cash rich. They are able to deliver. So you're actually buying from a very reliable developer who has experience in the market for over close to 60 years, I would say. I think they started in just want to get the fact right. They started since 59 years ago. 59
Yeah,
years in the market, in the industry. And their focus is on building socially and environmentally sustainable developments. You may not
yes.
find it relatable, but it's relatable for a lot of Melbournians because the cost of utility is getting higher and they are being four season country. You will need something that could save your utility bill, especially when it comes to
Hmm.
materials, the ventilation system. And Banco Group has been building a sustainable homes like this. And this will be all incorporated in EBV, by the way. And of course,
Yeah.
focuses will be on, they build shopping centers as well. They build apartment complexes, they build townhouses, but currently the main focus is EBV. So you should really, really consider this scheme.
Yeah. These are some of the images to show you the rooftop garden. So this is how the common areas will look like, you know, the landscape that will be built around all the apartments, and you can see the apartments are really really going to look very nice.
Yes, this is
Um,
the landscape piazza. I
yeah,
personally love that because when we have piazza like this, norm, from all the standard developments that we've been selling, or even in Malaysia, the piazza is just a piazza. It's just like a sitting area, no trees, no nothing, no flowers. But this is something quite unprecedented in
it's
our
very green. Yeah,
very very green.
yeah.
Next one.
And this is actually an existing cafe that's nearby here. I've been there many times, very popular. Again, this is just to show you that you have all these things within walking distance.
Yes, strong local demand. Well, we did our research as well. The population estimate for Brunswick is, which is the suburb, as of 30th June in 2019 is 15,425 people. But since the previous 7 years, the population has averagely grown by 5.5, close to 5.5. And whereas if you compare with the growth in Greater Melbourne overall, they were only at 2.3, I would say. So they do have a stronger, much stronger population growth because of the
It's double. Yeah, the population growth here, it's double the population growth in Greater Melbourne.
yes.
So I think this is another reason why we look at this and say, okay, this is doable.
And why Brunswick?
And
I think Brunswick was actually quite underrated back then.
mm, mm,
All the overseas buyers were just making inquiries regarding mostly like South Bank.
yeah, yeah, yeah. I think because this is still more pretty much a local area. And in the past 10, 15 years, it has actually transformed. We call it, it's been regentrified, and it's getting really popular especially the younger population. As you can see, more than 50% of the population here are aged between 15 to 40 years old, which is the group of people that you actually want to target as your um, tenants.
And I think
So,
the landscape, the business landscape in Brunswick has changed tremendously. Back then,
mm,
just normal retails or shops or agents like news agency, they're just really really standard set of shops. But currently, you will see um, there were new businesses like art studios, like fintech business, co-working space, all mushrooming around Brunswick area.
yeah, yeah,
That's a sign that, I mean, all signs are showing that they are thriving at the moment.
yeah. And hang on. And we will also want to show you an interesting fact here that the renting population in Brunswick has been increasing. So let's start 15 years ago. So about 40% of the population was renting.
Mhm.
And then 10 years ago, it increased to 42.4%, a slight increase. But look at 5 years ago, it suddenly jumped up to more than half. So more than half of the people here rent. And well, it will only go up. I don't have the number for this year because 2021 will be the year that they do the census, but it's not published yet. But I'm very confident it will be a lot more than this right now. So I think out of the, this is the third reason. We're going to tell you five, but this is the third reason why we think this is a very interesting project, something that you should look at. Okay, next, I guess this is what a lot of people want to know. Price. Why we pick this project? EPB is priced at currently at 8,800 per square meter. But look at the comparables that I put up, show you here. You have this one called 17 Union Street. It's at 11,000 a square meter. And then there's another one called Sarah Sands. It's also at 10,500. I actually have access to sell these if you want to, but why would you? I mean, EPP is so much nicer. It's a master planned community, but these two other projects are basically standalone, meaning that there's no like all these other amenities underneath it or built for this. And this one is next to the train line here. So I think in terms of price point, we are at a very, very sweet spot here. And then I know some of you would like to compare this with others. Let's compare. Let's look at this. in a broader way. Let's look at CBD South Bank, where a lot of people know, even South Yarra Prahran. Your price here in this region is 11,500 to 14,000. 11,500 is on the lower side. So you will be looking at, and a lot of properties, especially CBD South Bank, some in South Yarra as well. When you buy a 1-bedroom apartment or small 2-bedroom apartment, it doesn't come with car park. What you need to do, you need to pay to get one. So that makes these prices in this area a lot higher. Okay, let's move a little bit down south here. Armadale, Malvern, Glen Iris, 12,000 to 13,000. Let's look at Hawthorne. I know a lot of you know Hawthorne, 11,000. And then we come to the Box Hill, Burwood area. It's similar price to EBB, but they're not 6 kilometers from the city. They're 18 to 20 kilometers away. There you go. This is one of the reason why we think that it is priced at a really sweet spot. And another interesting fact here. So Brunswick East unit price. Unit is basically apartment. They call it unit here. It's actually 7.6% lower than Victoria's median price for unit. Yeah. However, Brunswick East unit rent is 1.25% higher than Victoria's median rent. So Shelvin and I discussed this. I'll let Shelvin explain why this could be the situation.
Um, I think back then, Brunswick East unit price being so much lower because in the past, we don't really see a lot of developments of new apartments coming out in the past 10 years, Brunswick itself. Um, then predominantly Brunswick in terms of the residential landscape, they are all predominantly homes, old homes, really, really old, like 20, 30 years homes. If you look at the number here, Brunswick East unit price 7.59% lower than the Victoria median price. Okay, there's only one reason to explain that. The rental properties were not available back then, but it became more popular because of the population of the students and also the local. But they can't afford to buy homes in Brunswick. And how do I put it? Maybe John, you can probably word it a bit better.
Okay, basically, I think what we discussed the other day, Brunswick is not like the CBD or South Bank or Docklands, yeah,
Yes,
where it has these other areas had a lot of international exposure. You know,
yes,
properties were being sold overseas, they were built a lot more high density, where Brunswick is still pretty much local. Yeah, it hasn't like prices, this hasn't been like inflated, you know, to like certain areas. So it is still pretty much a very local area. That's actually what we like. If you have spoken to me before or shopping before, you will know that we usually don't encourage clients to go into too high density or, you know, like to certain areas, but we think that Brunswick East is still pretty much a very local area, an opportunity, I would say.
and that's the reason
And
why I say Brunswick
yeah,
is really underrated because for all
mm,
users from international market, we're focusing on the CBD market, on South Bank, on South Yarra, South Melbourne. Everything is south, 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 all the way down to the south. But they actually did not realize that Brunswick was actually that close to CBD and university and all the amenities.
it's
Hence,
so much closer. Yeah,
it's actually much closer and
yeah,
lesser stops for the tram. It
yeah,
actually faster to get to the city. It's proven because I tried that before.
yes. Yes, of course. And another thing that since we're talking about this price, right, I'd like to explain there's this opportunity here because the gap between the house and apartment prices are growing bigger and bigger. As you can see here in March 2021, a median house price in Brunswick East is over 1.3 million, and the median unit price is over half a million. So as this gap keeps growing, people who comes in later, they will be forced to look at apartments. So this is where the opportunity where investor or apartment buyers will get to enjoy a growth in apartment prices. So in the past, maybe because houses were still affordable, the apartments were not, prices didn't go up that much. But look at this, the gap is growing bigger and bigger. So this actually present a really interesting opportunity. So median house price being so aggressive, more buyers will be forced to look at units and apartments in the very, very near future. And we didn't whatever information we quoted here, we didn't make it up. Yeah, we always put our sources there, so you can verify them too. And I guess the last important, the fifth reason why is the time frame. The physical completion of this block is expected at end of 2022. Number one, there is no immediate financial stress to you as an investor because, as you know, or you probably know that you only need 10% here when you sign your contract. So you have around 18 months time to prepare for settlement. You don't need to immediately need to, oh my God, where do I get the money? I need to move this and that. I need to find a finance if you need financing. So you basically have a comfortable time frame to arrange for settlement. Number two, also another key reason is the most developed nation. It's expecting that end of 2021 will be the time where international travel will be open. It's also where we expect our international students, our expats, our tourists are going to come back. So it timed perfectly. And thirdly, remember what we said at the beginning. I know it's been a while, but let me just remind you again that we are at the beginning of an upward price movement. So you're coming in at the beginning time and not later. So I think these are the three main reasons in terms of time frame why it is important. I hope you agree with me. So and before the site visit in the video, very last one, I think I want to show this to some newcomers. I mean, people who just started to explore, just to give you a bit of an idea of the investment overview. Okay, so I basically picked a property in Mont Chiara to compare in terms of price and rental income. So I picked Safina because a unit there, I was told it's about 1.5 million ringgit. So I've used an exchange rate of 3 just to make it easier. So it turns out it works out to be about half a million Australian dollars, and that's your yearly rent there that I put in there. And then let's look at a 1-bedroom apartment in EBB, 455,000, and that's the rental you're gonna get. And how about a 2-bedroom? A smaller 2-bedroom, it's about 604,000, and you're getting about 27.5 thousand dollars a year as yearly rent. So there's a lot of numbers. Yeah, let's look at the easier one. In terms of expected rental yield, 1-bedroom give you about 5%, 2-bedroom give you about 4.6%. How about Mont Chiara? So I think look at the screen, and I think this gives you now a much clearer idea why in the past 15, 20 years, Malaysians have been investing overseas in Melbourne. So now you know why. Okay, it's not too late. All right. Okay. Before the site visit, we would like to share with you a quick video, a word from the director of Bangkok Group. He couldn't join us today here live, but he has sent me a video that he's recorded that he would like me to play with you, for you. Just hang on. Okay, can you can see, yeah? Okay, I'm playing it now.
Oh, but there's no sound.
Sorry? There's
no
no sound? Okay, let me fix this.
Probably change your audio.
Ah,
I guess it's same as system or there you go. Yes. Should
okay.
work now. Oh, no, doesn't work. Doesn't work.
Can
But
you
we
hear?
no, we can't hear the sound coming from the video.
Just give me a minute.
It's okay. We do have the subtitle.
Can you hear?
No, we have the subtitle, so that's okay.
Okay.
Six km from the CBD.
A special package,
Yes,
FIRB rebate, free buildings and ceiling fans, interest on deposit. So we look forward to seeing you at EBV very soon.
it works now.
That's okay. Most importantly, it works now. So sorry guys, didn't set this properly, but it will work for the next important thing. So so we promise you a live site visit because the weather didn't look good. So my associate Francis here, he's actually just here standing next to me. So he was really kind. So half an hour later, when I was talking, he actually went out to film it. I'll just get him to say hi very quickly. So, and then I'll play the video that he kindly took for me. That's Francis. Yeah. Okay, I'll play it now.
Hello, Jolene, you can see me, right? Hi. I'm standing, guys, I'm just standing very close to where Jolene is. You know, Jolene just over there in the showroom. You can see that there's sort of a machinery going on here. They're digging the hole for the lot 3. The one that we're presenting today is actually lot 4, which the concrete, the basement has already been done, and you can see that there's some cranes that are there. So that's lot 4. Because the basement is done, from here to its complete, it's probably going to be about 18 months from now. Now, over this side, you can see that this is the stage 1. There are 215 apartments that has already been built and constructed. Below, below the apartment on the ground floor, there's a lot of retail facility, and that's what makes this project very special. So we got some cafe here, we got some liquor land that's very good for, you know, buying some beer and some alcohol. And most importantly, you can see that there's a coast there. That's a big coast. There's about 4,000 square meters of coast that are there. Now, why don't I take you into one of the completed apartment in the stage 1? Let's have a seat. Follow me. This is the vertical gardens. This development is all about sustainable living. You're buying to a future apartment that have 7.5 star energy rating. Let's go. All the apartments are very secure. If you are the visitor, you come here, you will press the apartment number, let's say 202, ring the bell, and someone will be able to see the apartment, see your face from their own apartment. But today I got the key, the special key, so we can tap into that, very secure. Get into here, second door to get into the apartment. The first door, which I'm not going to take you there, you can see some letterbox over there. Now, today, I'm going to take you to the apartment on level 1. This building has been completed, almost all the apartment has been sold, and most of them are owner-occupier. So people are liking here and living here. Let's come in. So this building has only been completed not long ago. You can see that there's some protection sheet on the lift. This is designed for if you were to move in, you don't want to knock over the lift, damage the lift. The protection has been set up probably for moving today. Level 1. Here we are. Okay. Now, whenever possible, the developer will put on some artwork. On the way back, I'm going to show you the artwork here. Now, let me take you to apartment 102. Let's go. Feel a bit awkward and see me walking backward. Make sure the key is the right key. The other way. Okay. So what we are showing you today, this is a 2-bedroom apartment, which is very similar size to the 2-bedroom apartment in Lot Ford. You can see that there's a kitchen area where Corey is standing, dining, so dining area, proper dining table with 4 full-size chairs and a sofa. Sofa here are pretty spacious. So this apartment is probably about, I think about 75 square meters, okay? And it open up to sort of a balcony or for the ground floor apartment, they will open up to a courtyard. A couple of things to mention here. In Australia, will be the standard that we're handing over in EVV. The kitchen, all the appliances will be provided, all the cabinet, and even with the aircon here, that we got the aircon is a ducted aircon, which will be standard on Lot 4 as well. Lot 4, that's in EVV, that's what we're presenting today. You got timber flooring in the living area, in the bedrooms. It has carpet, and this is a queen size bed. It's pretty large, pretty spacious. Just want to quickly show you guys about what's included in the apartment. Corey, do you want to maybe take a few shots around the area? So this is the first bedroom. Okay. That's the master bedroom. It has its own suite as well. It's very spacious. The tile are sort of all the way up to the ceiling. So this is the kitchen. Most of the 2-bedroom apartment has an island bench top, a stone bench top. You got the oven, cooktop, range hood, and some sort of feature slash bed. Over here, if I can quickly show you, this is the laundry. So just look at the floor plan, but typically we have a separate laundry room, which is very practical, and we try to set them away from the bedrooms. Now, let's go out. I'll take you to the, to the rooftop. Let me lock the door first. Just give me 1 second. Good. All right. So if we go over here, we're going back to the lift, and from there we're going to up to the level 6. Now this is the artwork I'm going to show you. It's a very simple artwork that you might think that I'm over-exaggerating, but whenever possible, EVV, we present different artwork. If we go to level 6.
Doors closing. Elevator going up.
The market in Australia are pretty hot right now. The auction rate are very high. On 27th of March, there's over 2,000 property on the market going for auction. That was the biggest weekend ever in Australia. So a lot of very good positive news right now. The banks are forecasting probably about between 10 to 20% increase in the next 12 months. So this is another piece of artwork that we presented at EVV. Now, probably worth mentioning that even in the facility level, it's all about tap. You need to tap into the facility level. Now, we are here on the rooftop, and I'm going to show you a couple of things here. It's pretty cool. So, all of these one are, the camera are not stabilizing, but I want to quickly give it back to Chloe and show you that. To give you an overview of the whole site, this is how big the size is. It's as big as about 3 hectares. We are currently on the stage 2 of the release. So getting now, you still will be able to secure some early prices. And you can see the level of the finish that we have delivered at EVV. And the concrete site that you can see, that's where the apartment will rise from that area. Okay. I want to give it to me so that Chloe can jump down. Okay. Now, back to Chloe. So this area, you can see that there's a lot of veggie patch, veggie gardens. At EVV, what we wanted to do is encourage residents to be able to go outside, go on their own veggie, really sort of emphasize that sustainable living. On the rooftop, which across the development we have many rooftops, they usually have different themes. For this theme, it's more about the veggie gardens. We have a barbecue station here, and across over there you will probably see, it's a little bit hard to see, but that garden on next building, which is part of the EBV stage 1, is emphasized on children playground. And this development is actually located only about 6 kilometers away from Melbourne CBD. There's also IMIT campus in Brown Street, so it takes about 3-minute driving distance to IIB, and 10 minutes into Melbourne U, 15 minutes driving distance into Melbourne CBD, and that's how close the Melbourne CBD is. Corey, come, let's get a bit closer. Let everybody see the CBD. It's a beautiful view. All right, then. I think that's pretty much it for today. Thanks, Jolene. I'll give it back to you. You guys have a good day. Cheers. Bye.
So I hope everyone has enjoyed that video. You actually get to see the real thing. It's no longer just on brochure. It's actually on the real thing. So, oh yeah, next I need to go back to my screen again. Hang on. Okay. So remember when we were watching the video from the developer earlier, sorry, there was no sound, but you could see the wordings, yeah? So he has already announced a list of incentives for all the buyers, all our buyers actually. So you get the FIRB fee rebate that's worth $6,350. You get the window blinds, some upgrades, and then interest on deposits. But there's already a long list. Is it good enough for you? I know a lot of people want to ask for more. So my associate from Dynamic Real Estate has been so kind that he said, okay, Jolene, for your clients, we're giving you a bit more. Wait for it. A 6 months free property management services for any of you who were to let Dynamic Real Estate manage your property. I think that it's a great savings. It's half a year of property management fee. And Dynamic has been so kind that they even offer this to existing property. For example, if you currently already have investment properties in Melbourne or properties here that you would like to be managed, he will offer the same to you. Okay, for all this, if you're interested, stay back later. We can do a one-to-one with you or schedule a call with you. And right now, I will let Shelvin and try to stay back, please, because if you're interested in financing, we have a guest speaker coming up very, very shortly. After Shelvin explained a little bit on some of the floor plans that we pick, we won't go through the whole list, but just a few. Okay, Shelvin?
Can stop share now, then I can roll up floor plan. It won't take long, guys. Stay with us. So I'm going to show you the typical layout plan for a one bed. And just bear with me. We'll go to the full screen view. Now, the typical one bed will be roughly about 550, 560 square feet in Malaysian context. And there is also the balcony. And balcony it has become an essential item for property selection or property features because of working from home lifestyle. They will need some outdoor space for their personal use. So balcony it has become really popular. Apartments on the second floor is 450,000 Australian dollars, and the same goes to 308. But the 308 is slightly smaller, hence they are priced the same as the second floor. Okay, then we have the same on the fourth floor, but just to give you a bearing. In terms of the layout plan, this is where you come in. You have an open kitchen and the living, dining. This is the cabinet. Then you have a bathroom, central bathroom here. This is your bedroom, and that's the balcony. Really functional. In terms of aspect, you're looking over to the landscape piazza, which is really beautiful, lots of greens. Then you have got the same aspect on the third and the fourth floor. Now here's another hot pick, 2 bed, 1 bath, approximately 720 square feet, excluding balcony. Entry, you have your bathroom and the toilets on the right side. Then you got a kitchen on the left side. Dining, living, a huge balcony. Then you've got your bedroom. This is the second bedroom. This is the first bedroom. And you got built-in wardrobes as well. It's all fully fitted. You're looking at 599,000 Australian dollars on the first floor. Then you have got another one on the second floor just with a small top up in terms of price. This is 2 bed, 1 bath again. On the second floor, it's facing towards the Coast supermarket. This is a south aspect, square layout, really functional, living, balcony, kitchen, bathroom, bedroom, and bedroom. Move on to the next one is 2 bed, 2 bath, which is quite popular among overseas buyers as well, and is good for resale. You're looking at about close to 750 square feet. This is where you come in, kitchen on the left side, bathroom, dining, living, a long, huge balcony. This is your second bedroom. This is your master bedroom, and you have an ensuite. This is a central bathroom. I really like this layout. And in terms of aspect, it is looking towards the alfresco dining area. That will be it. 650 on the first floor. and 665,000 Australian dollars on the third floor. And that's about it. It's a quick one. And perhaps we can now introduce Jessica, or are we? There you go. Yeah, there you go. So
Yeah,
Jessica,
Kevin, thank you, Jolene.
Jessica is our
welcome, Jessica.
from AAA. She's been in financing in this industry since 2000. Which year you were in?
Oh,
Finan-
I have been in this industry maybe for my past 6 to 7 years.
6 to 7 years. And
Yeah. Okay.
helping overseas landlords in getting financing from Australia for their Australian properties. And Jessica basically is a Malaysian. She used to work for AAA in AAA in Brisbane in Australia, and just recently returned to Malaysia. But very funny story in the sense that when she returned, the pandemic hit.
The first NCO, yes.
It
That's
was uh, I wouldn't call it as a good experience, but I think you were experiencing some
okay.
culture shock because of the pandemic as well. But yes, I think
Mm,
Jessica, you help us out here by explaining the standard, the guide rates or LTV for Malaysian buyers who are looking for financing facilities for their Australian homes. Just take an example of, say, 500,000 Australian dollars property as the case study.
Okay, maybe just do maybe I'll just do a short introductions. We are actually a mortgage broker in Australia that assist client who purchase Australia property for their financing. So we have branches in Malaysia, so myself in here, and we have branches in Singapore and also Hong Kong. So for you all know that currently major banks in Australia not lending to foreigner investor. It has been about 4 to 5 years that we have financial institution, or also known as a second tier of bank, that's offered to this program, foreigner program. And we are currently with this lender called Origin. Origin is contracting to AAA, so we can promote the financial products under our own brand. And the basically the product itself for a foreigner currently rate is as low as 4.28%, and long term is up to 29 years. LTV is up to 83%. For example, your 500,000, you can take up to 83% of, I mean, you can get a loan to about up to 83% from there. So what is good for our finance is you don't need to come to Australia to get a loan set out or any bank account to set out, because the package comes with an offset account, so you can use it for saving interest purpose or rent income or any transaction that you want to do. So it's actually is a benefit because we are not a private funder, because private funder won't be able to offer you a bank account. So Origin has been a second tier bank in Australia that has the ability to set out an account for clients. You just need to contact us. We just need to do the loan application. We will put the detail in and get the account set out at the settlement. Sometimes we can do it even before settlement. If you need to ready your fund to settle the property, we can get the account done first, and you can put the funds inside the account and get transaction done for the property. Otherwise, you sometimes we can also set out to contact your solicitor. We will do some transaction from there as well. Yeah, in terms of document, what we're looking at is very simple. 3 months pay slip or bank statement, simplified credit report. We will, of course, have a checks, organize this together, then we'll know you better and in terms of what you are looking for and how we're going to achieve the finance objective. I think that's pretty much I can cover for a product like this. Maybe Chauvin, do you have any question for me?
What would be the required documents for them to process the financing application through you?
Okay, so basically we will have a check in the beginning, right? But basic document will be ID, 3 months pay slip and bank statement, and simplified credit report form. I think in Malaysia there's a CTOS. You can actually organize it online, get a CTOS credit report in Malaysia. Yeah, so we will start from there. If there's anything that further, we will talk about it later.
Okay, okay. And what would be the standard processing time frame and what sort of fee we are looking at?
Okay, that's a good question. Maybe we'll talk about time frame. I would safely say from an approval to settle, it usually takes 5 to 8 weeks. But to get ready, especially for foreigner, we might have some other document they need to prepare. I would recommend client to contact me at least 3 to 4 months earlier. They will talk about it. We will structure together. So the process and we can settle in timely. We also do pre-approval application actually. Yeah, if
Ah,
you do it.
um,
Sorry.
Sorry, Jessica. We've got a question here for you by one of the attendees. He would like you to repeat what is the interest rate again. And the next question, do you look at the Malaysian loan commitments?
Oh, okay. So the interest rate is as low as 4.28%. Of course, it depends on LTV, and we'll go into the detail when you're looking at the purchase price and how much you want to borrow. For the other question is we will depends on the product. We have different products. So one of the product will be looking at we call it as a full document. It's like a full application, look at your full financial status, including the commitment in Malaysia and maybe other places. So another product that we have is something that we call sophisticated investor. We maybe can ignore all the liability outside Australia, but just looking at something that what you have already in Australia. So this is probably for people who already invested in Australia before. That's where we can starting to look at this product.
If the purchasers or the applicant has got some existing properties in Australia, will they get a preferred interest rate?
This is, I would say,
Because I've got that very often from my clients.
yeah, this is maybe not, but it could be a good profile that's the higher approval rate will for them. Yeah.
Okay, understood. And what sort of upfront fees will they have to expect when they go through you to get the financing approval?
There will be different fees and charges, of course, but I would safely say that it probably up to 1.5 to 2% of your loan request.
Okay, that's a good guide. That's a good guide.
Yes. So if anything that you interested about the product and want to know about the fees and charges and interest rate in detail, please contact me. Yeah. Also, maybe you can put inside your question in your registration form later. Then I will quickly give you a call, text.
I think there's another.
I think we've got another question here for you. Is it possible to have ringgit denominated loan, as I pay the installment in ringgit?
Ringgit Malaysian loan.
Ringgit Malaysian loan. What do you mean, like ringgit Malaysian loan?
Currency, the loan installment is in Malaysian ringgit, or rather, it's like just like what the bank in Malaysia, Maybank or CIMB Bank, who were previously approving projects in Melbourne, in Australia, in Perth, they offer Malaysian ringgit. That's what I get from Maybank.
Oh, okay. We are actually everything's will based on AUD because what you do is you are actually getting the loan from Australia, so everything settled within Australia.
Yeah, because this one is not a Malaysian bank, so I don't think they can do that.
That's right.
Yeah.
Mm.
Okay, I think, ladies and gentlemen, I know we have pretty much run quite over time because maybe we had too much thing to share. But again, I encourage you, we will to let us know if you would like a one-on-one session with us, so with Jessica, and then we will also be reaching out to you in the next 1 or 2 days. We thank you so much. A copy of this webinar will be available if you would like to request it. We will speak to you soon. Anything else to add in, ladies?
All good, all good.
Okay, if that's the case, we will say goodbye to everybody, and we'll speak to you in the next few days.
Okay.
Bye.
Bye, ladies and gents. Have a good one.